So, hi guys, welcome back. Today we're going to be looking at what I believe is one of the top comeback plays in the current market. So the company that we're going to be looking today operates in the travel industry, and travel has obviously been hit very, very hard. So as the vaccine gets rolled out internationally, we'll no doubt see that this company will make very, very big improvements into the future. The price is trading more than 50% lower than its pre-COVID highs, and it's recently even combined with Alphabet to improve its products and services. So the company today we're going to be looking at is Sabre Corporation. It's a travel technology company based in Texas, and it's the largest global distribution systems provider for air bookings in North America. It operates in booking management and hospitality solutions, and these have been solid producers of revenue and profits over the past few years. However, with the airline industry crushed due to travel restriction due to the pandemic, we saw the business prospects of this company sink dramatically. Sales have plunged more than 92% in 2020, and the losses in the first 9 months added up to more than $1 billion. Yet Sabre, together with its partnership with Google, is preparing for a bounce back in the airline and travel industry. So late last year, the company partnered with Google to launch an artificial-driven AI platform. So Sabre and Google intend this platform to be offered to their customers for personalized content and will boost their revenue and profit. And we can see that Sabre will make a good comeback into the future. And what we'll be looking at today is why this company will be a good buy in the future, and looking at the future growth trajectory and how the stock could move higher from its 2020 lows. So onto the video. So before we begin, if you do enjoy, consider subscribing or liking the video. It's free and it helps me out a ton. We're on our way to 200 subscribers. If not, thanks for watching anyway. Onto the video. So the first thing we'll be looking at today is Sabre's partnership with Google. So Sabre Corporation is already the leading software and technology company in the global travel industry today. And recently it was announced that Sabre and Google are developing an artificial intelligence driven technology platform that'll be an industry first. The technology will be known as Sabre Travel AI, which is infused with Sabre's technology databases with Google's state-of-the-art AI technology and machine learning capabilities. And this will help customers with highly relevant and personalized content more quickly, and will deliver better needs to the current traveler. So with its partnership with Google, it's developing an artificial AI technology that'll be smarter, faster, and more cost effective. It will analyze and predict customers' behavior, and they can sell these services, which will no doubt increase revenue and profit. And this will be used in more than 160 countries worldwide. So as I previously mentioned, that this company is trading more than 50% lower than previous highs. As of me making this video, the stock price is $10.78. As of me recording, it's close to $11. So as we can clearly see that before COVID, the stock price was trading at more than $22 to $23. It was heavily hit, going to below $5 for a while, and slowly it's recovered to around $10 or $11 as of right now. It's still trading at a significant discount, so if you do want to buy, it's still a good price to buy as of right now. The next thing we'll be looking at is the future growth. So you can clearly see that the future earnings growth and annual revenue growth clearly outshines both the industry and the market. The earnings growth of 92% will almost double the earnings per share. So although it dropped down 92% this year, it's up more than 93% next year. And that will not only kind of make the company back where it was, with the new partnership with Google, there's no doubt increase earnings per share over the long term as well. The industry will also be making a comeback. 25% year on year industry growth is pretty high, but because it operates in the travel industry, we can see that the travel industry as a whole will be making a comeback. The market's pretty average as always. The revenue growth of 40% is a very big it's actually a massive increase from what it is right now. Although the revenue decreased this year, it wasn't as bad as the earnings decrease. So a 40% revenue increase is massive and is very positive for the company, both in the short and long term. But once again, we can see that next year, we look at the stock price, if we look at the earnings and revenue, you can see the stock price will increase a big amount. The industry's revenue growth of 14% is average, and the market's 10.5% as well. So you can clearly see that the earnings and revenue will be making a big comeback, clearly outshining all of its competitors. So now we can look a little bit more in depth. So we can see it was hit very, very hard by COVID, going from about a dollar positive in terms of earnings per share, all the way down to negative $4 in earnings per share. But we can see right now the company is the worst it will ever be. It looks like the company will be making big jumps from 2021 to 2022 and in the near future as well, over the next 2 to 3 years. So the future growth trends look very good. So if we look at the earnings per share, the financial as a whole, if you minus the last column, which is the current year, we can see that all of these are pretty decent. Its earnings per share was pretty stable. Its dividends were pretty stable. Its payout ratio was fluctuating, but okay. Its book value per share was increasing, which was good. Its operating cash flow, cap spending, and free cash flow were all on an uptrend, which is a good, past indicator of the future of this company. The net margin was positive and okay as well. The return on assets, return on equity were both pretty decent, and the interest coverage was also okay. So as we can see, barring 2020, the financials are not amazing, but they're not terrible. But the main thing I was looking at this company was the future growth, and we can see that that looks very positive in the future. So just some final words. This is a solid company. However, it has subpar financials, but it is acceptable compared to pre-COVID. It has very high near-term growth over the next 1 or 2 years, making a good recovery play, and is trading at a good buy price as well. So as always, do your own due diligence, and thanks for watching. Bye.